Welcome everyone. Welcome everyone. Just to be clear, can you guys hear me clearly? Let me know in the comments if you guys can hear me clearly. And as usual, as we always do, you want to tell me where you're watching from. If you're watching me from Ghana, Nigeria, South Africa, how's it going though? Hope you guys are having a great morning and a great trading week already. So we're going to touch on some key analysis for today, as we've always been doing. If you've been following this live stream, then I really believe that your personal trading improves after every session. If you're joining every day and then you're being consistent, I really believe that your personal trading insight, knowledge should be definitely increasing and improving. I have a lot of people from Ghana, Nigeria, South Africa, Uganda, basically the whole of Africa, Namibia, UK, Netherlands. It's amazing to have you guys on here. So you know how we do it always. We're going to break down the charts, look at what we should expect, what is happening in the market now, what can you do about it, how can you position yourself as a trader, and how to take advantage of what is currently happening on the market. So to start with, at first, let us go over the fundamentals, because I realized that quite recently a lot of traders don't give priority to fundamentals at all. Everybody is focused on pure technicals, just looking at some candle formations or some order blocks or some fair value gaps or some break and race test, break of structure. No relevant person talking about central bank's decision on the market and long-term macroeconomics and long-term geopolitics and how it's affecting current price movements and sentiment. Everybody's just focused on just like that tiny bit of movement influenced by pure speculation. But you must be very much aware that more than 80% of the movement of the market is caused by fundamentals, and then the rest of the 20 is the technical. In essence, transactional motive of trading on the market account for more than 80%, and speculation, which is purely for profit seeking, account for under 20 or 30%. That's how come somebody will say that the market trends 30% of the time and the other 70% of the time is just consolidating. So let's start with what the market has been doing this whole week in terms of fundamentals. Monday we had nothing really going. Tuesday we had a bit of fundamentals, which was Canadian dollar, CPI, but it was in a monthly, so we didn't quite see much happening. And then we have on today, right, something big happened on the market, right, which is New Zealand dollar official cash rate being released, which is their interest rate, right? So the previous interest rate was 3.25%. Now New Zealand has reduced it by 25 basis points, taking their new interest rate to 3%, which is a huge shift. In the international world, unlike any other West African country, right? Most African countries, our central bank and then interest rates are usually high. You'd have Ghana giving what it used to even be in the previous governance, about 28% on treasury bills and interest, and then currently it's around 14%. I don't know about Nigeria, but it should be around 20% also. Huge numbers. But when you go to the European world and developed market, interest rate would be like at max you'd find 5%, always rallying between 0% and 5%, 1%, 2%. So a small fractional change means a lot, because already like they're not getting a lot of return on investment in the first place. So even though you're just seeing like that 0.25 taken away, it means a lot, in terms of investment, in terms of money, and in terms of decision and then transactional flow. So that's a huge one coming in from New Zealand, and that happened just a few hours ago, right? We'll see the implication of that on the chart briefly. And then we have CPI for pound also coming just right now, right? I'm yet to actually watch the implication on the market because I was prepping for this live session. I didn't intend to even like watch the price movement because I want to watch it with you guys. Then later on we have European Central Bank President Lagarde speaks, and the FOMC member Waller speaks, and then not any much fundamental for us to be wary about. But to get us in good faith, it will just also be wise enough to quickly watch what we have for Thursday and Friday to sum it up as well. So Thursday, we have quite a number of fundamentals as well, but mostly in Euro and USD pairs. So we have the flash PMI, and then we also have unemployment claims from the US and whatnot. So not necessarily the one that encompasses my four predominant fundamentals that I always, warn traders about, which has to do with the interest rate, inflation rate, unemployment rate, and then GDP, which is gross domestic product. So normally those four are like the one that I see them as the movers and shakers. I call them the movers and shakers of fundamentals. So if you don't know anything about fundamentals and you want to even get started as a trader, I always recommend that the number one place that you want to start from is understanding inflation rate and its implication on the market, interest rate and its implication on the market, unemployment rate and its implication on the market, and gross domestic product and its implication on the economy and on the market. Once you understand that, you should be very grounded in fundamental conversations in the market. Just these four. The other ones you can learn them as time goes on as well. So since I didn't find any of them here, I'm not so shaky. Then we can go into Friday. Also, we have what GBP retail sales, but it's on a monthly basis. And then Fed Chair Powell speaks at 2 p.m. So obviously, because he's the chairman of the Federal Reserve of America, then whatever speech he gives is significant. We can overlook it because it can be the key information he's releasing that will change the course of direction or investor sentiment. He could be giving cues on whether the Fed has intention of raising interest rates, or he could be giving a cue as to whether the Fed has interest of cutting interest rate. And then you could also be releasing some key data that you can be used in other speculations as well. So yeah, his speech is mostly monitored on the Wall Street and then investors alike. So now that we have a good position on the whole week's fundamental, means that the only one that we should be more like, let's say, worry about, which has already happened anyway, is New Zealand dollars interest rates, very important one that came in, and then the CPI for pound. So I'll show you in a quick snapshot the impact of that 25% basis point, right, in all New Zealand base currency and cross currencies as such. So I'll start with Euro New Zealand. If I go on Euro New Zealand, what do you see? See that huge movement here. What is it as a result of? It's as a result of that fundamental that came, right? So the euro, in essence, is depicting strength against the New Zealand. Why? Because the New Zealand dollar has reduced its interest rate, which presupposes that they are going to be cutting short investors' return. So it means that investors would want to be pulling out their money from the New Zealand economy. And since it is paired with euro, it presupposes that euro would be a more preferred investment means than New Zealand. That's how come the chart interpretation is that when the news is negative in terms of interest rates cut, then you see a spike on the upside. Because remember, if you see a currency pair listed as, sometimes I always like to emphasize some of these things, even though they kind of seem like the most basic beginner knowledge that everybody should know. But trust me, there are like 414 of you here. More than half will probably not even know what I'm about to share now, even though it's predominantly basic. If you have Euro NZD, right, the market mostly moves in favor of the first pair. When I say move in favor, don't quote me wrongly. What I mean is that the chart is representing the base currency for the most part, which means that when you find the chart going up, it means the base currency is strong, and when you find the chart going down, it means the base currency is losing value, right? Which is a transpose scenario in essence, which also means that the very same time we see the base currency going up, we can then, let's say, presumptuously assume that the quote currency is also what? Weak. And then when we find the base currency trending downwards, then we can also presume that the quote currency is what? Is strong. So that's a basic way to look at market movement, and once you think about it that way, to always stick in your mind forever. All right, so those of you who didn't know, I hope this came in very handy for you. So now that we have this going up like that, right, what you should remember is that these fundamentals, they are not momentarily. Momentarily is more like, okay, just because the impact occurred from here to here, you just assume that, oh, that's the end, and then you start thinking otherwise about the market. Impact of fundamental events such as especially interest rate can last for weeks and sometimes months, sometimes even years. When I say impact, I mean long-term directional movement of the market according to that interest rate, right? So there's a bit of information I'm putting together, which will always, anyway, I'll share most of that information in subsequent live sessions. So let me not get ahead of myself. This is also a key to always remind you to subscribe to this channel and also follow me on all social media at Kojo Forex, and then stay glued so that you don't miss some of these key informations. I know that this time in my career you get a bit of screen time from me, so measure each one of the screen time you have from me very valuably, and then save every information that I dish out like gold. So I'm saying that sometimes you have fundamental events like this, lasting in terms of its implication for days, for weeks, for months. So when you have such an event like this, as a trader, first thing you should think about is that don't think that after the day ends, the impact is done. It means that what we could be here and subsequently see Euro GBP keep trending downwards. It can come lower high and then keep going up, higher high, lower high, higher low, higher low, and then higher high. And then even though you're seeing the interest rates now at 1.995, right, you could wake up in the next 2 weeks, 3 weeks, 1 month from now, and the interest rate is what, exchange rate is what, 2.0, which means that you'll be exchanging €1 instead of for $1 New Zealand dollar and 99. Then it would rather be €2 New Zealand dollar for €1, right, which is a significant increase, right? So what I'll do in situations like this is I'll zoom out, which is like watch the bigger picture, right? Watching the bigger picture means that going into like the daily time frame, right? Okay, then it begins to reveal something significant to us as well, because once we just switch to the daily, see that we have this one in focus, right? So we have this key level here, right? To even see a much bigger perspective, we can also go into the weekly time frame. If we go into the weekly time frame, we also see that what there is also another significant level right here as well, right? And then obviously the weekly gives us a much broader perspective, so it may or may not be necessary to switch to the monthly, but if you want to, that's also fine. This chart gives us or dates back all the way to 1999, so it's like a lot of data to make informed decisions about the last time that Euro NZD traded up to this region was in the year 2020, which is like a long time from now. That was like COVID-19 era. You can remember, you can see the date, 1st February 2020, right? I remember very well where I was in my life and in my trading journey when that spike came, and you would not believe how things have changed, from being a trader, just following that personal journey, just in the span of the market. A lot has significantly changed. So this is like in there's a combination 5 years of price data that you're seeing here, right? So this is a personal motivation for you. Who knows, maybe from now 2025 to 2030, which will also be another 5 years to in total make it a decade, you could also have massive transformation and change in your personal life if you take some of this information seriously and then build yourself up properly from there as well. So I was very much active in the market when this came, and like I said, it's as a result of COVID-19, right, when there was absolute lockdown everywhere, and then the market just eventually came down, and now we're having it back there again, right? And you can see that the last time we had that level broken and the market traded anywhere above that, the highest point was all the way here, which is like 2.5, and this is all the way in 2009, and I can bet that this would be around the global financial crisis and housing bubbles, right? So sometimes as traders, I advise that you should go back in time and see significant shift in the market and ask yourself what was happening around this time. You have AI to assist you, you have Google to assist you, to let you understand like how price moved and what was happening around that era. It's like history, right? Because that's the embodiment of technical analysis in the first place, using historical price movement to anticipate future price movement, right? So if I leave all the history and all of that and I come back to the reality of today, then it means that this level right here is very significant and very important, right? Means that for more than 5 years now, the market has not traded past that level. But now interest rates are being reduced, right, from the New Zealand camp, right? Does that mean that it'll probably be like the catalyst, right, that in the next couple of weeks would make us see a break from this range upwards and so forth, right? You see, I marked two levels now. The one at the bottom marks that level from 2020, and then the one right here also marks this level from April 2025, right? I can't recount exactly what was the fundamental reason that drove price up to this point, or what was exactly happening around this point in the market. But again, I remind you, you can always use Google or AI to assist you to learn or date back what was happening. So if you're watching what I'm saying, I'm saying that perhaps because there's fundamentals that has significantly impacted the strength of the New Zealand dollar, then do we suggest that from here on, within this range of the market, we would rather be more, let's say, on the good side of the market if we are potentially looking for trade biases of a buy than even a short? But who knows? The thing with fundamental is that now we have that of New Zealand dollar out, and then it's showing that signs of weakness. But perhaps next week we could have euro also, the European Central Bank also coming to announce their interest rate, and then suddenly it's even lower than what the New Zealand did, and then it shifts the focus, right? So that's how come as a trader you can never give less priority or eliminate fundamental in your trading decisions. You get what I mean? Because somebody would be here and instantaneously say that, okay, Euro NZD is in support, resistance level, so I'm beginning to look for a short position. They're going to be starting to look for, if they're using all this other new school technical analysis, they're looking for sweep of liquidity, order block, what, break and retest, and then they're finding reason to short the market. But they're not even considering that what a major fundamental data like interest rate has been released, and then we've dated back into the historical price of where was the name Euro New Zealand traded in the last 5 years, right? So it's significant operation. So I'll leave those two perspectives for Euro New Zealand for now, right? But I think the message is absolutely clear. You can do that for New Zealand USD as well, right? You can see that what the same thing happened there. The data pushed the market down like that. Since we've talked about it, it will be easy for me to wrap around quickly so that we don't miss out on some of the instruments to talk about, right? So weakness in New Zealand dollar, and then what do we see? A New Zealand card drop as well, and then New Zealand Japanese yen also a drop, all from the fundamental data that was driven. So I think for the rest of the day we'll just see price continuously going down, eventually find a part of least resistance to rest up on. You could have the market continuously coming down perhaps into this level for the next couple of days or even weeks, and then that will be like a good level for the market to relax briefly. And then if we come back to New Zealand dollar card, right, then in terms of looking for part of least resistance, right, you know what I call part of least resistance, the most immediate significant low or most immediate significant high that the market can rest up on after a key level or a key range has been broken. So if you see here, it's like the key range here was this resistance, which was holding for the last, let's say, 2-3 months now, and suddenly it's been broken, right? So it's like a free fall now. But if you look at this market, most immediate low, significant low that we can see is here, right? Does that mean that the market is going to just come all the way down after this level? That's overly ambitious expectation. So in such a situation, I'm very wary, what to call. But if you want to cross boundaries, then we have this low here, which is almost where the market is trading at. Then there is also another low right here, right? That's like you going across the most immediate low we have in the market to historical lows in the market. But sometimes they do also hold, right? So it's not only the most immediate lows that hold. If you have a price action looking in a situation like this, then it will not be fair to go and tackle here as the most possible level that the market is coming into when there are other significant lows, even though they are not like the most eminent or the most immediate one. So logic will only permit you to mark those levels down and then potentially expect some reactions there as well, or set them up as a target for the market to come into as well. So yeah, I hope that is a simple and easy trick up on your sleeves there as well. I think that's all with Euro. That's all with New Zealand as a cross and base currency pair that we've discussed. We can now go into the pound. Realize that we also had a bit of fundamental for the pound, just like the CPI, right? It's just a consumer price index, right? Which is also inflationary data, right? And increasing, but we didn't really see much of a movement here as well. The one thing that you must understand is that as a trader, you must always look out for the characteristics of any instrument and the fundamental that has any impact on it. For the pound, for the most part, these major fundamentals barely have any implications on them. It's like the market is non-reactive to these information. What mostly would have pound extremely reactive to is let's say a bit of geopolitics and internal politics. You get what I mean? When there is time for a reform, and there is time for referendum, and then there's time for UK Prime Minister elections, then you'd have like the pound being extremely volatile. But any other day, when there's like news events, you barely get excited about the pound. So those of you that is asking me to jump up with the other instrument, we are going to tackle it. That's what we do all the time here. We don't jump up to just haphazardly analyze anything. I have all of them on the watch list, as you can see. So just be patient, and the instrument you're looking for, we'll definitely get there and talk about them as well, right? So it's better to pay attention and take information and knowledge that I'm sharing on the other instrument. Perhaps you can also apply them in the favorite pair that you trade as well, right? So pound USD, very interesting one. What I personally did, I marked up this level, and then I marked up this level as well, right? And the beginning of the week, we had the pound actually starting to trade from here, right? Around here, thereabout. And then what did I do? I sent out in my personal group, and then the Kojo Forex website, which I said, if you have the time, feel free to check it out, right? If you go on kojoforex.com, right, and enter the dashboard, we have the forecast session here, and then another forecast, right, which is like giving you more like a basis to expect what I see on the market. You can see that we are GBP USD short setup, and then I give a whole explanation there. So it's also an added tips and tricks for you there as well, right? So what happened? I said that I was expecting pound to trade perhaps up to this level, and maybe from here we have a continuation on the upside. And it's pretty much clear why I would expect such a thing. Number one, we already see that what we have more like an inverse head and shoulder formation. We have the left shoulder head, and then this instrument was right back on the neckline, right? So it was pretty much simple to assume that what we're going to have it trade downwards, perhaps also back into this, which would make a nice formation, and then continue upwards like that. I always tell you that what we can never do away with chart patterns in the market. It's like the godfather of technical analysis. So no matter what level of technical proficiency you think you've reached, you only be doing yourself a disservice when you think you're too big to go and study chart patterns, or you're too big to identify and respect chart pattern from playing out in the market. You would be a very rookie trader, no matter what level of proficiency you are, no matter the new jargons of technical names and SMC and what you're using, IFVG or whatever, if you don't respect technical analysis from the core point of chart patterns, and building on from there, then you always make the most basic mistakes in the market, or take the most basic speculative decisions, I'd say wrongly. So yeah, that's my insight for pound USD. Since we saw it trading a little bit downwards, I don't know, with this what's the name, CPI release, we want to watch if it will change the overall bias, or still like bring it back down like that. But if you didn't really get any trade setup around here, or even on the pullback that I called out that you could have jumped in, then it almost becomes risky to want to look at a trade opportunity around here, current price now. So you better wait and see if price is going to get into this level, and that will be like a much interesting point to look for a trade setup for a buy. So yeah, that's like a little bit of insight into pound. And then we have pound Japanese yen. Also, we started talking about it from last week, right? And if you look at the pound Japanese yen, there's a bit of things that I've talked about with pound Japanese yen, and mostly I also did that from the higher time frame perspective, right? So looking at this, we've had this level respected, come back there, and then the market is back there as well, right? But you can see that on the third time, it's just like a lot of choppiness happening here. And what normally would happen when you have situations like this, the market is playing around here for a long time, sometimes psychologically allowing a lot of traders who have potentially benefited from this short sell to assume that we're going to have another short sell again, and then let them keep short in this range until perhaps the market decides to change on them and then break a level like that, right? So like I said, in trading you always must think like a contrarian. Contrarian is like when everybody's going left, you watch and wonder, why is everybody going left? Nah, you should see it as a danger and go right. For the most part, you that is going right is likely to be right than everybody else that was going left, right? If there was a key lesson that I learned at the beginning of my journey as a trader, when I used to always question myself that, why is it that anytime I put my stop loss here, then the market will come and take my stop exactly where it took my stop, then it started going in my direction? Has anybody experienced that type of market behavioral here? Let me hear some of your stories in the comment. Have you felt like the market is watching me? You get so frightened. You're like, no, these people are watching me, these people are monitoring me. Why did I put my stop here and it came? And then you think like there is some algorithm behind that is watching your lines, and you get to a point, some people even tell you that don't draw technical analysis because the market makers can see your levels and whatever it is. That someone will tell you don't put stop loss because the market level can see your stop loss, and then with that, one of the key advice, even though I later transformed it into a strategy, right, was that if you are having such an experience happen frequently, right? If you're having such an experience happen frequently, somebody said I thought it was spiritual. If you are having such a thing happen frequently, right, then what do you want to do? The simple logic is that put your entry where you would have put your stop loss. You get what I mean? So let's say that, you want to take this trade here. Let's say you are expecting this market to come back here, and then you take what? A sell, right? In expectation that the market would come here into the same level and then come here down, right? Now think about it this way. you would have now decided to put your stop loss here, isn't it? Right? And then your entry here, right? So now, why not change the stop loss, right? This SL. Why not change the SL, right, to entry, which is like rather anticipate the key things that you watch to take a trade in this zone instead, right? The key things that you'd have watched to take a trade here, rather watch it here and try that and watch the market crawl into that range and then do exactly what it used to always do for you. So that is just a bit of a psychological trick to help you understand that nobody is watching you on the market. You are just choosing the zones and levels that everybody else is choosing, and so the market is attracted to those range and will always drive price there to take you out, right? So it's just like your life depends on it. So take this little bit of cue and apply it next time you feel like somebody is watching you in the market, right? Yeah, so what I was saying with regards to GBP JPY, because I personally did that insight so many weeks back, I switched to the weekly time frame, right? And I saw how this candle closed here, right? You see this? Because already GBP JPY is in an uptrend, or has been in an uptrend, right? On a weekly, going up multiple weekly bullish weekly candles. Then suddenly we have this bearish candle, significant one, and instantaneously being cancelled by a bullish candle. That's a sign, right? Already this level has been holding for weeks now. 1, 2, 3, 4, 5, 6, 7, almost 7 weeks. But even if you want to be more ambitious, you extend it, then you see that what it's actually been holding for almost a year now, right? And sometimes when the market wants to break a zone or a level or a range as significant like that, some of the signs you tend to see is proper reversal patterns, right, being displayed on the most significant and higher time frames, right? Let me show you a clear example. I don't know in what year or what level and what may have inspired this, but for those of you, some of that have been in my trading community for so long, some of that are also in my private mentorship and tutoring. What pattern is this? Write it in the comment section for the new people who are yet to learn, to understand. And once you list the name of that pattern, right, once you list the name of that pattern, what is the resultant effect when we usually see these patterns on our key ranges? And what do we observe here? A huge drop from here. Okay, so we have one person mentioning that those that were using Google, well done. Those that actually know it too, well done. Those that were asking ChatGPT to, also well done. But yes, that is evening star formation, and normally what happens is what we expect the market to trade lower after that formation. And what did we see? Huge sell-off after that beautiful evening star formation. So now that we've seen a huge tweezers in a key range like this, then it's only enough to assume that what pound Japanese yen would potentially, maybe not today, maybe not next week, maybe not this month, potentially break this range, maybe head for this level again. So I'm very wary and skeptical looking for short trade on the pound Japanese yen, right? Even though like I said, it's tricking a lot of people into moves like this, but you do yourself good to wait for a while and see if the market begins to like break a range or a zone like this, right? Let me zoom in properly for you guys. Delete this one, clean it up, and then once we have price trading, so this can even be a potential quick speculative entry also for you, right? Remember, this is also not a trade advice, but an insight shared for that purpose, right? So potential zone, right? For those that are so I always say risk averse, and those that also have a strong risk appetite would be already looking for trade entry from here, right? And then traders that are risk averse, right, would wait for price to break, and then they want to like continue. And this is again risk appetite strong is also traders that I wanted to say a term, what's the name again, they have like high risk appetite, right? And then here I say traders that have low risk appetite, right? So if you have a low risk appetite or low tolerance for risk, you could be waiting for breakout, and if you have high tolerance for risk, you could be waiting for formations or clear confirmations around here for your own trade, right? So that's a simple perspective, but I'll still leave this level right here for you as well, right? Or leave it right here as well for you anyway, right? Most immediate high that we had the market coming into. That's for Japanese yen. Anyway, let's quickly shift from there into some interesting pairs and then commodities as well. Bitcoin has been very interesting. If you see my speculations for Bitcoin, right, especially when we had this triangle, I really anticipated that it was going to go up from there, but I think that, like I said, from a contrarian perspective, if everybody sees something, it's likely not to occur on the market, right? So it did happen briefly, in a way that if you see here, right, what happened? The market instead of trading upwards straight like that, right, rather broke down, came to test this level, and then came back into that zone again. Still got a lot of people thinking that, okay, this is the time we're going to go up again, contrarian perspective, and the market rather came down and eventually went all the way up. Going up, what happened, right? Going up, what happened? Better to look at what happened after it went up, right? And I'll share with you something simple. So this is exactly how you'd have been seeing the market before it went up, right? And then Bitcoin did what? There was this initial high, the highest point Bitcoin had traded, already established there. Then we had market move, right? Get into the zone. Remember, this is on the 4 hour, right? Get into the zone. What happens? We have what? A strong rejection on the 4 hour, right? This alone is a key cue for if you're going long, especially on an intraday or a speculative swing basis, to start thinking, to start rethinking, right? This strong rejection, somebody will call it strong liquidity sweep or structural break, whatever terminology you want to call it, still fits the same model. What do you observe from there as well? Huge drop, right? Very aggressive drop from there. So if you couldn't take any entry here and then you're taking here, then you're increasing your risk span, because this is like a very huge candle, especially talking in terms of BTC. But the moment you think you're even late, there's nothing like being late on BTC. It's aggressive. It will print a big candle and still continue with another huge one from there. So the more you're waiting, the more it's just going against you or in your favor. Very volatile, very aggressive. So I'm always very careful even trading Bitcoin. But I know some people have such a huge risk appetite and then they have the balls and what it takes, to go aggressive on Bitcoin. But that's absolutely up to you again, and then your risk appetite, by the way. So I'm still very bullish long term on Bitcoin. I have called Bitcoin to $150,000, and I still think that we're going to see price there. Normally when you have all of these things happening intermittently, right, from a macro scale, we call it the accumulation level or accumulation duration, right, where price knows that it has a huge target to go, but it's just like consolidating for weeks and tricking people and coming down, right? It's presumed that big money or hot money, right, or some will also call it smart money, is dragging price to fill in more orders before that massive push, right? Before that massive push. But as much as we are always also very ambitious, we must not be married to our bias, right? That's one thing that if you learn and heal from quickly as a trader, you will begin to do very well. Some people let their ego make a decision for them than what is physically happening on the market. So as much as I've posted on social media everywhere that, hey guys, I'm expecting Bitcoin to reach this level, I could change my mind, or intermittently the market could be evolving into something else, and I'll say maybe in the mid-range we would rather have this happening before so and so happening. So remember that keyword I said, do not get married to your position, right? Do not get married to your position as a trader, right? Just a second. Okay, let's continue from here. So why I was saying that, right, briefly, that do not get married, if you guys zoom into Bitcoin now, right, on the weekly time frame, what can we see? We can see some significant reversals occurring, especially looking at how this week will end will tell a lot. How this week decides to end will tell a lot, because if I mark this level here, and then if I am particularly looking at these formations that is happening here, right, and this one happens to close solidly, then that will be another beautiful evening star formation here, and that could change the long-term directional perspective of expecting Bitcoin to come to 150 to intermittently, maybe then I can pull like a fib to it, maybe approach the 61.8, 78.6 region, right? Maybe another deeper pullback before anything happens, before it decides to go there or so, right? So for those that are Bitcoin investors, just like hold that crypto asset for long term, you should be skeptical. So see, you may think through this for better insight. Look at when we were here in 2021, when Bitcoin was trading around 50,000, 60,000. What were the formations we're seeing here? 1, 2, 3, and then 1, 2, and then huge drops from there. If I come all the way down to 2020 and 2019 price ranges as well, You know, you can see what's happening here after the highest price was reached. You can see the rejections around that range. These are long-term insights, right? So I'm using the same lens and same eyes for here today, right? So anyway, we'll keep it like that and see how it unfolds from there. Possibly get a good sell-off from here before an evolution into a buy setup again, right? Then let's tackle Nasdaq and US30. I marked these levels for Nasdaq and US30 as well. If you want to really see long term what is likely to happen on the market for months, weeks, years, it's always key to watch it from the weekly time frame and then the monthly time frame. Want to watch candle patterns from the weekly and then the monthly time frame. Last week I was telling you that what history was being made because those levels that Nasdaq and US30 were trading were not levels that we had seen before last month, and then I was telling you that what if you want to normally as trader speculate on a zone that the market has not traded before, it will be fair to speculate on psychological levels, which is like round numbers alike. And then you can see that what after it retraded above that high, then it came a little bit of a point away from 24,000, and right from 24,000, what happened? We've had price coming all the way down like that, so I don't know, what do we expect? Will we see price continue to 23,000 from this region, or will perhaps like continue lower to this previous support level established here? That'll be something to, let's say, expect, or that'll be something to take a second look at. But as it stands right now, I don't have any speculation on Nasdaq at the moment, right? Look at US30 as well. I've had a bit of similar price action, but not even any nicer one to make any decision on. Nasdaq, US30, you know how they are, very, very aggressive indexes. You have to be very skilled and timed and have some level of risk tolerance to normally trade those instruments, because they are volatile. They can, most people, when we say volatile, they don't understand what it means. It's like the rate of price changes, and directional change in those instruments is very significant. One time it can be showing itself like it's going bullish, next minute it will just suddenly change and go bearish, next minute it's going bullish, next minute bearish. So you're not able to like tell on a consistent basis what direction to be on a long term, and those are the characteristics of such instruments. Then I'll touch on gold. I know people are always waiting for what is happening on gold, and so on and so forth. I quite remember that last month, the last time we had a live, I was expecting gold to react around this level, right? So I marked it around this range. I think gold was still trading around the end. I said that I would expect it to continue lower, tap into this low, and then trade up from here, right? And what did we quite expect or observe? Yes, it did come into the low, but it traded below it and quickly came back up there like that, right? And I've actually shot a brief strategy video on this, and I'm going to actually be posting it on my Instagram maybe before this week ends. So watch out for it, and see logical way of trading when you have situations like this. And simply put, like when you have a key level, whether support, resistance, volatility range, market trades into it but doesn't continue lower, quickly brings price up, what to watch out for, candle patterns to take note of, and then how to trade that price action back into another significant high, right? So that's exactly what we saw happen with situations like this, right? Where price traded below that range, that quickly came back into it, what to look out for and what opportunity you could have taken from there. But fast forward, this is where we have gold, and especially here, there's a lot of people that were trying to go long here, including myself, because the price action seemed very interesting to assume that we're just going to continue higher from here. In fact, the first point where I was really expecting a continuation higher was here, right, when I saw this formation right here. But for some reason, market just being market, right, didn't continue that formation higher but decided to trade lower, into this level, and now it's still doing the same, going lower and lower. It's like the more you try to short it, the more you try to go long, the more lower it goes, right? And that even reminds me the most, and I'm glad that this part of the topic came, because I must remind you, traders, right, that we are in the month of August, and then we're almost ending the month of August, and also to get into September as well. And historically, these months are usually very slow in terms of liquidity and in terms of volatility on the market. It is presumed that happens because big institutions would usually have their summer breaks around this time. You get what I mean? You remember that I just literally returned from London about 2 weeks ago. Everybody is happy there, and these are big international cities that the financial market trades on: London, New York, and then Tokyo. So around these seasons, it's usually summer there, and then people are meeting with their families for barbecues, going on holidays. So people that take significant trading decisions are not seated by their chart, trading that will let you find any relevant or significant price action. So if you are hell-bent on finding that long movement, you may not see that, and the market will just keep working against you. It is practical that around these ranges, you rather day trade or scalp than looking for huge swing movement until somewhere around September, ending towards October. Then we'll have normal price action happen again, for swing position. So here I'd more be in expectation of like daily day trades, easy to catch, that 70 pips, that 80 pips, that 100 pips, than looking for a 300 pip, 500 pip movement on gold. And you can see what from the beginning of August, this is just the price action that we've had on gold right from the beginning of August, right? Check here, this is the date here, 1st August, right? After that big move from 1st August, all we've had is just that little bit of movement till now, and then August is ending literally around here. August is ending literally around here, right? And then September also continues. So anyway, it's better to be prepared in the market and also as in any other situation than not at all. So if we're talking about preparation, then we cannot overlook marking our fib range, right, which is the blue range that I've drawn there, and then I want to see how price will behave around that price point, right, and potentially look for a long setup. More so, we can see that there's some form of what I call it counter trend occurrence here, right? Let me remove this one and use this one. So you see here and here like that, right? It's like what? Gold trading, zigzag, this guy. More like, I don't know what type of pattern is this, and so we have like that eventual breakout that will take the market up. And so when you start seeing that significant formation, you would know that that time is up, and then we could go long on gold. Maybe it will be more realistic to expect I'll take profit around here, or more like long-term speculation around here. But this makes up for a good how many pips is this? 1,400. Very significant, very, very significant. So ambitious as well. But that would be like my analysis for gold. I'll be watching this level. Still will not stop that quick intraday trades, catching that 50 pips, 40 pips, 60 pips, 100 pips. But if we have like that perfect setup for a swing, we'll also jump in and hold it for the longest of time. Right. I hope you've had a very interesting, very insightful session. As usual, I cam your screens to always give you a 1 hour full-on digest, from fundamentals to technicals to everything you can think about, even sentimental and strategy. So in the last 1 minute before I leave you guys, tell me what you learned, how interesting it is, what new perspective, and also perhaps any question that you may have wanted me to talk about, or you had in mind to ask before I leave you guys. Briefly, how insightful was it? Did you enjoy this session? Was it interesting? Did you learn anything new? I Kojo with your analysis on your website. It doesn't have a lot of current updates. Okay, I'll try my best to be putting a lot of frequent update there for you guys. I've had my hands full so I'll do my best for you guys. I can go short on gold, right? I don't know, it's your choice to make. This is just an educational insight. Can you throw a little light on LDR? Hi, could you analysis on, let me see, as most markets pull back deep, and how do you know or notice them anyhow? Do you adjust? I don't understand what you're trying to say though. Why is most market pull back deep? Oh, so why is most market pullbacks deep? I think it's just behavioral, like for you to be able to find every logical reason of price movement in the market. It's like being able to tell people when God or Jesus Christ will come or the world will end. It's almost impossible. So you just appreciate the price movement, and then you find an edge in the chaos, which is what makes trading a special endeavor. Somebody say it was really nice session. God bless you. Anyway, guys, I appreciate the feedbacks, the questions, and all of that. I hope you guys learned a lot, and I hope that this guides you for the rest of the week and then months to come. I'll see you guys, or you will see me on your screens again somewhere next month again. Follow me on all social media and Exness as well to be updated on the next session. And finally, I'll just say peace.